Jim Brogan with Brogan Financial. Jim Brogan, it's always great to talk to you, sir.
Good afternoon, Hallerin. How are you doing?
I am fantastic, and it's always good to get an update from you. Things are moving around. Let's start with the Fed. I noticed the Fed chair had remarks last week, I think it was. He mentioned that you could see some movement with rates. Let's kind of just get an update on what the Fed meeting last week really said about interest rates and what we can expect, and maybe what this says about a potential recession.
Absolutely. So it was kind of a no news is good news out of the Fed last week, Hallerin. They decided to keep the rates, the Fed funds rate where it is right now, 5.25%. And he didn't really telegraph we're going to cut rates or we're going to increase rates or hold them the same. He said he was going to let the economic data tell him that. However, what was noticeable, a couple of things, is he said, he's very committed. Before he cuts rates, he wants to see inflation continue its trend down to 2%. And, of course, inflation has hovered in the low threes and has not been continuing downward. So he, to me, seemed pretty clear that he wants to see that number continue to go down before he starts cutting rates. At the same point, he wants to be careful that we don't see recession. It's kind of interesting, Hallerin, because in October of last year, just 4 or 5 months ago, most economists thought we were still going to have recession, and now most of them are saying, no, we're not going to have recession. So, we don't know for sure, but I'm not so sure that I think persistent or even increasing inflation is maybe the greatest economic challenge we have right now, or the biggest threat, let's say that. I like where it is right now, but I don't see him cutting rates, at least for the next several months.
410.
So I think he's going to.
You think he's going to just hang tight for a minute?
I think he's going to hang tight at least until the back half of the year. I'd be surprised if he didn't do something before the end of the year, but I don't think he's going to turn around in May or June and cut rates.
I've been seeing these signs in front of banks. CD rates have been surprising. Haven't really paid attention to what's happening with U.S. bonds. Where are we at on that, and are those still a good bet?
I'll say two things on that. One, we are in an anomaly a little bit right now. Typically, when you do CDs and Treasury bonds or AAA-rated investment-grade bonds, typically it's hard, you just don't beat inflation over time with those. We're in an odd anomaly right now where you can get a one-year CD, 5.2, 5.3%, and the inflation rate over the last 12 months is 3.2. Well, I wouldn't expect that to last very long, but it is an opportunity for short-term cash that you're confident you won't need for the next, say, 6, 12, 18 months. You can typically get over 5% going all the way out to 18 months. Now, if you go to 24 months, it starts to drop. But for short-term needs, with money that you don't mind committing to 6 or 12 or 18 months, it's a good deal. Now, however, the one cautionary tale I would have is that you just cannot compare a CD to being invested for growth in the market. I can't tell you how many times Hallerin in the fall told me, Jim, why wouldn't I just put everything in a CD making 5.3%? I don't know that I can make that in the next 12 months in the stock market. Well, you're kind of comparing an apple and an orange. What I'm confident is, given 7 or 8 years, an at-risk diversified portfolio is going to make more than CDs. And so if that person in the fall put all their money in the CDs, they missed out on tremendous growth the last 4 months in the market. So, and one of the keys to being successful in the long term in the market is to be invested. Now, you need to balance risk and be diversified, but you've got to be invested. So be careful that it's an apple and an orange when we compare a CD with investing into the market.
Let's talk a little bit about something I saw. Did some GOP lawmakers try to put something on the table to raise the Social Security retirement age? And
he did.
Did I see something about Medicare convert? I don't know this term. converting to a premium support model.
Yes, so the Republican Study Committee, which is a group of a little over 170 House GOP lawmakers, many of which are allies of the Republican nominee Donald Trump, they've kind of come out with a series of things, but one of them was to slowly increase the Social Security age to be more consistent with life expectancies, because the tables we use right now to determine Social Security payouts based on age was developed in the 1980s. So there's talk of that. Now, they've said they haven't given any specifics, and they said it wouldn't go into effect for anybody that's already in retirement or near retirement, but they didn't define that. And it's like anything else, Hallerin. Both sides of the aisle are going to come up with proposals. What actually gets passed? Probably nothing the rest of this year with a divided Congress. The Medicare thing, you may remember, Hallerin, in the 2012 presidential election, there was some talk from the Congressman Ryan, who was the vice president nominee. There was some talk of this whole thing with the Medicare premium support model, and it was basically offering subsidies for people to either be on Medicare or to use money from the government to buy private insurance. So it would be trying to privatize Medicare a little bit more. Both of those proposals are because Medicare and Social Security are going to be insolvent within 5 to 10 years. However, in this political environment, you and I both know they're not likely to get anything passed on either side.
Yeah, they just ran it up another $1.2 trillion. Just so, all right. Jim Brogan, how do people get in touch with you if they'd like to learn more? And I know you got some classes coming up.
Yes, sir. Well, our website is broganfinancial.com. They can also, my next class is through Pellissippi State. It's Income Planning for Retirement. It is a one-night class. So it's 1 2-hour session on April the 9th. So that's a week from tomorrow. 2 weeks from tomorrow. 6:30 to 8:30 p.m. I would love to see you there, because that's 2 hours where I just talk about how do you structure income retirement, how do you reduce taxes, how do you choose Social Security benefits, how do you support income withdrawals in retirement.
Really smart stuff. Jim Brogan and his team are 5-star first class. Jim Brogan, I'm always excited to talk to you and always enjoy your show on Saturday mornings. Thanks for being with us today.
Thank you, Hallerin. Have a great week.